Welcome to Bloomberg Technology. I'm Emily Chang in San Francisco. Stocks rising yet another day. Investors hopeful about the continuing reopening of the economy despite new waves of COVID-19 in multiple states. Arizona, Florida, Oklahoma, Texas, just to name a few, states seeing an increase in cases and hospitalizations, along with Beijing, which appears to be going back into lockdown. The president, meantime, touting a new infrastructure plan to help restart the economy, some of the money being earmarked for 5G and broadband, and new developments in the House investigation into big tech. Bloomberg has learned that Facebook CEO Mark Zuckerberg and Alphabet CEO Sundar Pichai will testify if called, along with Amazon CEO Jeff Bezos. We will get to that in a moment, but first let's talk about the markets. Abigail Doolittle joining us to break it all down. Abigail, another wild day. Talk to us about the main drivers today.
Well, you're right, Emily. It was truly a roller coaster day. At the highs, the S&P 500 up about 3%. At the lows, up just 0.3%. So starting the day out with that bullish tone, some positivity around a possible cure for the virus, plus those retail sales, the best on record ever. And we'll be talking a little bit more about that in a moment. But then virus news coming out, Beijing closing schools, plus Texas hospitalizations at a record high, Florida at a record high. Net, we had stocks close sharply higher, though. The NASDAQ 100 up nearly 2%. Apple up for a third day, a big driver there, getting a boost from price target standpoint from Citigroup to a street high of $400. The analysts there very positive on 5G. CISCO getting an upgrade at Bank of America to a buy, up 2.5% on that. And yesterday we were taking a look at the NASDAQ 100 VIX, a fear indication, volatility indication, down ever so slightly. But at some points during the day, Emily, as you can imagine, it was higher. Now, after the close, we, of course, have a stock on the move to the downside. That is Oracle. They reported their fiscal fourth quarter, and it was disappointing relative to revenues. They missed their revenue number just a bit. And that's really a tell, Emily, that the COVID-19, the pandemic, could be weighing on the corporate IT spend. So while we have this strong at-home technology spend, corporate IT spending is a bit weaker, and that could be worrisome, as we think about the year ahead, Emily.
Interesting. You also mentioned retail sales being a driver. Give us more detail on those numbers. We know the president was boasting about the retail sector, but the numbers still are below what they were pre-COVID.
Yes. Well, so from a growth standpoint, it appeared very positive, up 17.7%, the biggest percentage surge ever. However, there was such a big drop prior to that. So from an actual number standpoint, we're nowhere close to recovered. However, we do have a huge surge for certain areas such as clothing and accessories, up 190%. As you can see, food services, gas stations, and cars are lower, not surprisingly, with people home. Where we also had a lot of strength was with home, anything to do with the home, furnishings, decorating, even home improvement, pools, anything to do with the home. People are trying to make it more comfortable. So when we take a look at a breakdown for the retail sector, which overall on the day was strong, not surprisingly, brick and mortar was very, very strong. Nordstrom up 13%, one of the top performers in that sector. Also Groupon. Now, while you, of course, go to Groupon on the internet, those are coupons and deals for brick and mortar retail foundations. So that stock absolutely surging. On the other hand, stay-at-home retail, not so much. eBay and Etsy higher, but really underperforming the other big retail winners. So an interesting divergence there between this idea of stay-at-home stocks, reopening stocks, lots of tension there. We will be here to follow it, as always, Emily.
Interesting, Abigail. I know plenty of desks have been bought in this house. Okay, Abigail Doolittle for us in New York. Meantime, the Trump administration touting its latest proposal to get the economy going. Bloomberg has learned Trump's infrastructure plan calls for spending almost $1 trillion on infrastructure in particular. Most of the money would be set aside for traditional projects like roads and bridges, but some would be spent on 5G networks and rural broadband. To discuss, we're joined now by Bloomberg's Josh Wingrove, who covers the White House for us. So what's significant, Josh, about this latest plan, and what stands out to you?
Well, I think the tree is significant. We know that Democrats have a proposal to essentially beef up an expiring transport law. In other words, there's a window to do something here on infrastructure. We've kind of not really been sure what President Trump wants to do. Did he want to roll something on infrastructure maybe smaller into the next virus aid bill if they do that? Or does he want his own thing? And it looks like door number two, although this is all very preliminary. What we know is that the Department of Transportation is preparing a proposal on behalf of the administration. We understand it's about $1 trillion. We don't know how long that is stretched over. And Trump has previously, 4 months ago, before the pandemic, talked about that figure over 10 years. And if you use that as a blueprint, they wanted about 20% of that for additional infrastructure type stuff beyond just the sort of static roads and bridges. So it looks like they're kind of maybe building off of that, but there's no decision made on it right now. But I think it's clear that maybe on both sides of the aisle we have momentum in Congress for at least something infrastructure related, even on the eve of the election. As I say, that law expires in September, just 5 weeks or so before the vote.
So how much of this might go to some of the more techie pursuits like 5G, like broadband, which are sorely needed right now with all of this sheltering in place?
I think lobbyists start your engines. I think we'll see where this goes. It'll probably play out a lot like that initial virus aid bill did. But like I say, going back to that proposal from pre-COVID that he had, it looks like they want sort of non-traditional infrastructure, if you will, to be able to access 20 cents on the dollar. So this could potentially be big money, something on the order of nearly $200 billion. Now, of course, hanging over all of this is growing rhetoric, I should say, or at least negative views from the president on China. He blames China for not doing enough to quell the virus. As such, he blames China for the impact the virus is having in the States. We can expect to see him continue, I think, to ratchet up pressure on China. And along the way, I think we can therefore expect him to ratchet up pressure on Huawei and Chinese telecom as he looks for a sort of non-Chinese solution to build out American 5G infrastructure and that of America's allies, who the U.S. is leaning on to avoid using Huawei and other Chinese companies as they make their own plans. So I do think that the landscape is being set here for something to be done in a way that does not include or at least minimizes the role of Chinese firms in building 5G.
Meantime, the president held a press conference earlier about police reform, then veered off script. Obviously, so much still happening in this country. You're seeing resurgence of cases in Arizona, in Oklahoma, where he's supposed to be doing this rally, in Florida, in Texas, also in Beijing. How do you expect the administration to continue to confront this, especially given these are new waves in states that have already, progressed significantly in their reopening?
Yeah, absolutely. I mean, they are downplaying the risk of it. There's an op-ed tomorrow in the Wall Street Journal by the vice president who is saying there is no second wave. And in a way, he's right. All the states that are having big problems or at least look like they have concerning trends are having their first waves. And that includes Oklahoma, where the president will hold a rally this Saturday. That includes states like Texas, which had something like an 8% jump in hospitalizations today. Florida is a concerning trend line. So the U.S. is not out of the woods with the virus. And the president is advocating for reopening without doing a lot of the things that might make it smoother, like, for instance, encouraging Americans to still socially distance, like wearing a mask himself. The vice president went to Iowa today and ate at a diner without wearing a mask. So I think the president is kind of just hoping that this will continue to decline, but there are warning signs that not only of a second wave, which most epidemiologists expect to come, it's a question of when, not if, it's that we're still in the first wave, and many states are taking steps to loosen restrictions that could help it to continue to roll.
A tale of two Americas, Josh, coming to you from our socially distanced home studio. Thank you so much, Josh Wingrove, on the line for us there, our White House reporter. All right, coming up, Oracle shares sliding after reporting their fourth quarter results. We'll break down the numbers with Dan Morgan of Synovus and talk about what else is happening in big tech next. This is Bloomberg. Oracle shares down sharply in late trading after reporting fourth quarter results. The company feeling the impact from the pandemic and not in a good way. I want to bring in Dan Morgan of Synovus Trust. Dan, what's your take on these results and how Oracle seems to be weathering or not weathering COVID-19?
Well, Emily, I think in a lot of ways the results aren't too big of a surprise. You know, we think of Oracle, they're a leader in the relational database area, they're a leader in the enterprise resource planning, human capital management. These are all huge enterprise software types of programs that they have, and it's not too big a surprise that they came in a little bit light. One of the statistics I was looking at was their cloud service and license support number. That came in at about $6.85 billion. That was below what I was looking for, which was about $7 billion, and only represented, Emily, about a 1% growth rate. So not too big a surprise, and that is that they, again, are still trying to make that migration as being a pure player, more of a cloud company, like let's say an Adobe, which has made that migration. That's an older line tech company, or let's say like an AWS or Microsoft that's been successful in making that migration. So they still haven't quite got there yet, and I think that's what showed up in these numbers today.
The company, we're listening to the earnings call right now, saying they're working with their clients on resuming deals, but still also having trouble signing up new clients to new deals. How is Oracle performing, as far as you can tell, compared to some of the competitors out there, like Salesforce? I mean, are they in a demonstrably worse position in the pandemic than some of their counterparts?
Well, you're right, Emily. I mean, like we said, they're so enterprise focused. If you think of, for example, you mentioned Salesforce, they have about a third of the software as a service market share in the cloud space. If you look at Oracle, they only have about 6% market share. So I think where the opportunity for Oracle is going forward, Emily, is that they have this huge installation base of people that use their ERP, their database software, that they can then convert over into cloud. And they've only really converted about a third of them. So I think that's where they have an in, where they already have the clients. They've just got to be able to sell them on the idea of using their clients or their cloud suite, opposed to, let's say using, let's say, Salesforce. And I think that's where the real challenge and opportunity comes in for Oracle going forward.
Meantime, continuing to listen to this call, Oracle saying a number of customers actually delayed payments, but they're expecting to recoup all of those delayed payments, and they're looking to achieve, quote unquote, record margin next year. We're going to continue to follow these headlines as they roll in on the back of these results. Meantime, I also want to ask you more broadly about some of these other stories developing. We know that the federal government has been looking closely at big tech, and now we're seeing some progress in the House antitrust investigations into Facebook and Google. Facebook CEO Mark Zuckerberg, Alphabet CEO Sundar Pichai, both companies have said those executives are willing to testify if necessary. Amazon CEO Jeff Bezos, we also know he is willing to testify as well. How big a risk do you think these federal probes are into these various companies?
Well, Emily, I don't foresee any sort of legislation that's going to come out, let's say in the next year or two, that's going to, let's say, break up Amazon or break up Apple or something like that. We hear a lot about that. And I hark back to the late 90s when there was talk about breaking up Microsoft. I will say this, though, Emily, and that is that if we look at some of these charge-offs that have occurred more recently, for example, we know that Facebook did a huge charge-off about, 3 or 4 quarters ago, where they just kind of amortized a big payment for, settling some of these disputes. We know that Google has also made payments in the past. So I think what it looks to me is more of like something down the road where these companies are going to be forced to kind of write a check and take a loss on a quarter to kind of meet the demand of legislators in regards to a violation that they may have. But I don't see across-the-board breakup of, let's say, Google.
Meantime, let's talk a little bit more about Apple. We don't know yet about Tim Cook's willingness to testify in these U.S. congressional investigations. We do know that the EU has opened 2 antitrust probes into Apple. However, we do have a statement from Apple, these probes into the App Store and Apple Pay. A statement from Apple today saying it's disappointing that the European Commission is advancing baseless complaints from a handful of companies who simply want a free ride and don't want to play by the same rules as everyone else. We don't think that's right. We want to maintain a level playing field where anyone with determination and a great idea can succeed. I mean, some pretty large companies like Spotify have complained to the EU about Apple's practices. What's your take on how big a risk this could be? I mean, if found guilty, Apple could face a fine of up to 10% of its annual revenue.
Well, Emily, that's interesting because it really focuses on their service side of their business, which grew about 17% last quarter. We know that the services side, the Apple Pay and everything they do in terms of their apps and so forth, that's a big component going forward of their overall growth. I mean, we know that iPhone revenue, for example, last quarter was down 7%. So that's a big part of their growth recipe going forward. And it's a big part of offsetting some of the slowness that we're expecting in these upcoming quarters, because a lot of people aren't looking till probably the holiday quarter or maybe into Christmas that we'd get the 5G, which would be the next ramp up in terms of people upgrading their phones. So this is something obviously we're going to have to follow if they end up having to, write off or change what they're doing in terms of this area, which is obviously a huge growth area, which is their service segment.
Meantime, last quick question about Facebook. Obviously, Facebook has been facing a storm of controversy about how they moderate content on their platform, not labeling or fact-checking a fairly incendiary tweet by President Trump. Do you see this as an actual risk to the long-term business, given that it is such an ad-driven business?
All right, Emily, and if you think about the last quarter, Facebook came out and said we're going to spend $52 to $56 billion in security, in artificial intelligence, amongst other things, to try to clean this up. And it seems like it still has been somewhat of a challenge for them. It's obviously something they're working on. You can imagine how difficult it would be on all the platforms that Facebook has to fact check or make sure the information isn't false and so forth on everything that's being said. So it's almost a huge endeavor. They keep putting a lot of money into it. It obviously drains their bottom line in terms of their EBITDA and their EPS compared to their top line growth. So it is something that we have to follow. Emily, just for example, if you think of Facebook this year, they're actually supposed to grow revenues, but their earnings and profits are actually going to be negative in terms of growth, just because I believe of these expenses associated with kind of cleaning up their platforms.
All right. Many stories there. We'll continue to follow. Dan, thanks so much for sharing your thoughts with us on a bunch of topics today. Dan Morgan of Synovus Trust. Always good to have you here on the show. All right, coming up, employers are rushing to innovate new technologies to implement social distancing at work, and Amazon now has some new software. We're going to tell you about the e-commerce titan rolling out new tech to ensure proper social distancing at warehouses across the country. Will it be enough? We'll discuss. This is Bloomberg. Amazon is deploying new social distancing software across its warehouses. The software, called Distance Assistant, warns employees when they're too close to their colleagues, and is the latest effort by the e-commerce giant to adjust its practices to life in the time of Corona. I want to get to Bloomberg's Matt Day in Seattle for all the details. So talk to us about how this software, Matt, actually works.
So this works a little bit like the augmented reality experience a lot of people will be familiar with from Pokemon Go of a few years ago. Now, employees are filmed on video cameras with depth sensors. They see themselves in footage as it happens, and superimposed around them, if they're keeping good distance between themselves and others, is a little green circle that follows them around. As soon as the software detects they've come too close to somebody for social distancing guidelines, that circle turns red. So it's designed as kind of an immediate piece of visual feedback to let folks in high traffic areas know that they got to spread out.
Now, how has social distancing inside the warehouses been working up to this point? I mean, we know that there's been a lot of workplace agitation around these issues. We know that there have been a number of cases. We know that there have been some deaths from COVID-19 among Amazon employees. How are they still delivering all our stuff as quickly as they are, but staying safe inside?
And so we know that they've gotten back on track a little bit in terms of the speed at which they're able to move things through their warehouses. They've pulled people off of some workstations. They've spread out others. They've put some very analog distancing measures in, cardboard signage or plexiglass signage. And Amazon thinks they've got a pretty good hold on things. They say they've made more than 150 changes to processes in its warehouse to keep folks safe. That said, it's never going to be perfect. And employees we talk to say there are still some tasks where it's really difficult to stay apart from people and some kind of lax enforcement within the warehouses. This is sort of a digital way to maybe help police that in the future.
Speaking of since you used the word police there, I know in some ways Amazon can't win, but, obviously workers want to be safe. We want workers to be safe. But at the same time, this new technology sounds a little big brother. I mean, how is Amazon addressing, potential privacy concerns here, especially given all of the discussions about how law enforcement uses and applies technology?
So Amazon's taken a couple of unusual steps with this software. Normally this kind of thing would run as a cloud computing-based service on Amazon servers. That's not the case with this stuff. They say this software program is run locally on a computer and not even uploaded to the internet, and the data is not stored, right? It's only a live, in-the-moment kind of annotation of a video feed, and that data goes nowhere. Now, that's probably going to draw some skepticism, for a company that does store a great deal of data, but at least in this offering, they've taken some steps, the spokesperson said they did, to make sure that, this couldn't be used for potentially nefarious person tracking processes.
Meantime, Amazon has its own facial recognition software that it was providing to law enforcement. It has actually paused the use of that for, I believe, a year it is, so that Congress can work on legislation about how this technology can be used. What is the latest on that?
So they have not explained much about what this policy is going to mean for users of the tech, other than police departments can't use their facial recognition tools for a year. We do know that Congress is debating new measures as part of broader police reform that would say something about facial recognition, but it's kind of unclear whether that would meet Amazon standards. We do know that they say that, hypothetically, if you're a police department that was using this stuff a week ago, you no longer have that capability today.
All right, Bloomberg's Matt Day for us in Seattle. Thanks so much for continuing to keep us updated on Amazon's efforts here. Matt Day there for Bloomberg. All right, coming up, CISCO expanding its efforts to fight COVID-19 and now systemic racism with $500 million in new commitments. We're going to speak to CISCO Executive Vice President and Chief People Officer Fran Katsoudas next. This is Bloomberg. Welcome back to Bloomberg Technology. I'm Emily Chang in San Francisco. Cisco is committing more than $500 million to help mitigate the impacts of COVID-19, and it is now redirecting some of those funds to fight systemic racism. Cisco CEO Chuck Robbins is also turning one of the company's regular conferences into a forum for discussion about how stakeholder capitalism, quote unquote, and advocacy are not enough. I want to bring in Cisco Chief People Officer Fran Katsoudas with us here. Now, Fran, thank you so much for joining us. So obviously, this is a big number here. Talk to us about where this money is going and why you think it's best being redirected.
Thank you so much, Emily. It's wonderful to be with you. So the first thing that I would say is that for over 30 years, Cisco has been a big believer in supporting the communities around the globe. This is something that has been incredibly important to us. It has shaped the way we show up, the way we train students around the globe. So the approach that we've taken is really to focus in 4 key areas. And you're right, we started first with COVID, and then we started to look at how we can leverage these funds to also address racism. So what we're doing is first we're looking at those that are most vulnerable. The second thing that we're doing, which I think is very close to our culture and what we care about, is we're looking at family and communities. We're then looking at resilience and research and how we can play a bigger role. There's some amazing opportunities from an IoT perspective as well. And then lastly, we're looking at really the strategic imperative and those initiatives that can make a difference. And so our dollars have really been spent in these 4 key areas. And then what you heard about 2 weeks ago was we decided to take a bigger stand as it relates to racism. And so we've given dollars to the EJI, NAACP, Color of Change, and many other organizations that we think can play a significant role. And as you would imagine, we're having a lot of the conversations and taking actions internally as well.
Let's talk about those conversations, because for decades, companies didn't necessarily take a stand on social issues. And I know that's something that Cisco increasingly has decided that, you know, the company has to take a stand to have these conversations internally. How do you internally draw the line between work and politics, work and social issues, or are they increasingly simply intertwined?
Yeah, it's such a great question and a good point. So what's so interesting is that we decided that we had to have this conversation, and there was a stat that was shared recently that basically said that the workplace is where we experience difference. 70% of people say that they don't experience difference in their home or personal lives, but they do in the workplace. And so I think it's all the more reason for us to truly lean into it, because I think this is where we're going to make significant progress and difference. It is true that once upon a time this was seen as something that you didn't talk about in the workplace, but I think the realization that we've had is that if we don't, we're not going to see the change that's required. And so after hearing about the very sad murder of George Floyd, what we did was we called an employee meeting. We invited Brian Stevenson from the Equal Justice Initiative and Darren Walker, and we just had this conversation where we were educating our teams. We were sharing our perspective, how we were going to show up. And Emily, something that I think is so important is that we shouldn't bring politics into racism. That is something that should actually just not be considered a political issue, and we're doing our best to navigate that with our employees.
Now, Fran, these are really sizable commitments that you're making. Despite that, you know, we've been having a lot of conversations about this on our show with folks in the African-American community. One investor, Arlen Hamilton, told us, well, these commitments in general are nice, but they also ring kind of hollow. You know, why is it only when companies are, you know, sort of pushed into a corner, or when the Black Lives Matter movement sort of rises up, that companies are just doing this now? It's something that they should have been doing all along. What is your response to that?
I think that's incredibly fair. When I think about some of the comments and the great messages that I see multiple companies putting out there, I think what employees are looking for is, are we living this internally? And I think the power is when employees feel like their companies are committed to change and they see these significant differences and improvements in the community. I think that's where you actually start to find momentum. For us at Cisco, it's interesting. The first week of January, Chuck actually gathered us in his home with about 20 of our African-American leaders. And we spent about 3 hours, Emily, just listening to their experiences at Cisco. And from that, we learned a lot. It was incredibly moving. But what we knew more than anything else was that we had to take action. And so we created at that point a 100-day sprint. And the results from that sprint were that we achieved 110% of our university hiring goal. We always do pay parity runs, but we did another one with incredible focus. For the first time, we did a promotion parity review as well, which was powerful. And then we set goals around listening up and down the company to truly understand. And the nice thing about that is when our employees understand that we've been doing that work and they see this commitment, it just feels real.
Now, Cisco has committed, and I know we've heard this from Chuck, that you won't be laying off people in the midst of this pandemic. Is that a promise that you can continue to keep now, knowing that we're officially in a recession, the uncertainty will continue, and we don't know how long this economic, social, and health crisis is going to continue?
You know, I think Chuck was very clear at the beginning of the pandemic that we were going to do every single thing in our power to prevent putting our employees out into the job market. And that's something that we care a lot about. It's something that we're going to work incredibly hard to do. It's funny, my team at the moment, we're getting really creative about ideas on how to reduce some of the costs, how to navigate through potentially a recession. And we're going to do our best to stay in this mode and continue to make at the same time the right calls for the business.
All right, Fran Katsuda, Cisco's Chief People Officer. Fran, so good to have your voice here today. Thank you so much for joining us. All right, coming up, the food and travel industries have been significantly disrupted. We'll speak to the CEO of Kayak and OpenTable about trends he's seeing next. This is Bloomberg. Air travel won't be the same until at least 2023. That's according to Kayak, the company tracking demand via flight searches on its platforms. Even with countries and cities slowly reopening, it's still a long way to go for the travel industry. I want to bring in Steve Hafner, CEO of Kayak and OpenTable as well, for a view into what's happening with air travel and restaurants alike. Steve, thanks so much for joining us back on the show. Let's start with air travel. What kind of demand are you seeing? How much is it picking up? And will it ever go back to normal?
Thanks for having me on, Emily. Yeah, we are starting to see a slight recovery in consumer travel intent. So at Kayak yesterday, we made available publicly all of the information from over 1 billion flight queries made on our platform for the last year, so that people can actually start seeing where the demand is starting to pick back up and how people's travel trends are changing. So what you see from the data is the low point on our systems was April 7th, when travel queries were down 80% versus the prior year. If you look at yesterday's information, it was only down 51%. So yes, we're still in a big decline, but boy, a big surge since early April.
So let's talk about longer term. Let's start with corporate travel. Do you think corporate travel will ever get back to the way it was? I mean, obviously, it's a way for companies to cut costs and also keep employees safe. And now that we know how well we can do things remotely, like you and I are doing now, some will say, what's the point?
Yeah, I mean, you're asking someone who used to spend every day a week on an airplane, and I've been without an airplane for a while now. The reality is, I think corporate travel always lags consumer travel in terms of a rebound from a shock or an economic recession. I think this will be no different. The difference here is people now have proven that you can actually be fairly efficient working from home, and you don't need to actually lose the time or incur the costs of a lot of business travel. So I think corporate travel will bounce back, but probably take longer than consumer travel, and that's why we're predicting a return to 2019 levels of overall travel bookings, not until 2023 at the earliest.
So you do think by 2023 things will be back to normal, quote unquote? Because I actually wonder if there's going to be a permanent shift. I mean, at least, when it comes to consumer travel, are people going to want to get on a plane, or are they just going to drive somewhere, driving distance, and not take that risk?
Well, the wild card actually is, what happens with COVID-19, right? Is there going to be a vaccine? We already have much more effective treatment protocols. We have greater testing capacity. So I think if we can keep that virus and any successors at bay, then I think consumer confidence will return. And I think as a business person, I certainly am looking forward to getting back on the road and back on airplanes to visit customers and business partners.
Now, what about the restaurant industry? OpenTable came out and said 1 in 4 restaurants will never reopen. Now that we've had this wave of protests, we're seeing new waves of COVID-19 across the country. How does that look? Is it more than that?
It may be more than that. I hope it's not. We've got about 60,000 restaurants on the OpenTable platform, and we do expect about a quarter of those to permanently shut down. So no new restaurant under a different theme will reopen that location. And that reflects a couple things. First, restaurants operate on really thin margins already pre-COVID. You add on top of that the safety measures they have to take, any capacity restrictions they have, and the higher cost of recruiting personnel to work at those restaurants. And it's going to be tough for them. Even in the best of times, it's a tough business. So I do think that we're going to see a dramatic reduction in economic activity on the restaurant side, which is tough for the economy because restaurants historically employ so many people.
So how dramatic a reduction in terms of the traffic, the economic activity?
Well, I mean, if 25% of restaurants close, I think I wouldn't expect the rest of the remaining locations to pick up all that business. But, I don't want people to underestimate the creativity of restaurateurs, and the flexibility that governments are showing them. So here in Bridgehampton, restaurants that historically have never had outdoor spaces now have tents set up. The city's opened up lanes for them to operate. You have pickup, you have delivery, you have prepackaged food. So I think there's been a lot of innovation in the space, and OpenTable is doing everything we can to help them too. So, one silver lining of the pandemic is consumers and businesses are much more likely to adopt online or digital services now. So the OpenTable software is now allowing you to bypass the hostess stand, to read an order from the menu, and to pay. So I think that's all will require less staff at the restaurant level to run their businesses, which is helpful.
Meantime, you have so many restaurants that are operating at a reduced capacity. There are limits on what they can actually do. And I wonder if we're not even seeing that in some of the numbers you provided, if the real story could actually be worse, because some of the restaurants, even though they're still open, they're just doing a fraction of the business that they once were and can legally do right now.
That's right. I mean, if you look at our data, about half of the 60,000 restaurants on our platform are open for business again, albeit at reduced capacity. And if you look at the number of seated diners at those restaurants, it's 78% below where it was last year. So they may be open, but they're not nearly serving as many diners or making as much money. So that's why I think pickup and delivery and other business models are going to be really important for restaurants moving forward.
What are you hearing about staffing? We've heard anecdotally that some restaurants are having trouble getting employees to come back because A, they're nervous about their health, B, they can collect unemployment. And I wonder how much that is going to hold restaurants back, even though there are so many people out there who don't have work right now.
It is a big consideration, and a lot of very famous restaurateurs have been very vocal on this topic, that an unfortunate byproduct of the government's rush to provide very generous aid is some of that aid was more generous than those employees would make working in the hospitality industry. That makes it even more difficult for a restaurant to bounce back. But I would try to take the flip side of that and say this is a perfect time for a restaurateur to reimagine how they're conducting their services. So do you need a traditional hostess stand, or would you trust a customer to come in and message them on the OpenTable app, for example, which table? Do you need a waiter to hand out menus or to collect orders or to give you the check at the end of the transaction? Or will you just allow your customers to order from apps and pay and walk out? So I think there's a lot of improvements that a restaurateur can make that you can do without having the same level of staff needed to service the restaurants before this pandemic hit.
On that note, Steve, innovation happens in times of crisis, and I wonder if this has you rethinking any potential partnerships. Like, would you be willing to integrate with a company like Airbnb, which has home sharing, property sharing, instead of just traditional hotels? We know that Airbnb absorbed Hotel Tonight. Could you be open to new types of deals that maybe wouldn't have happened pre-COVID?
Sure. So Kayak, our premier travel brand, we've always had a good relationship with Brian Chesky and the folks over at Airbnb, and we've always wanted their inventory on Kayak because we want to be comprehensive. Brian has historically been restrictive about that and wants to keep all of his inventory on his platform. But most of the inventory that is on Airbnb is also available on Kayak via other distributors like Booking.com or HomeAway, et cetera. So, I do hope everyone in the restaurant business and in the travel business comes together and cooperates a little bit more. Certainly, that's what we've seen as we've been going through this pandemic. With with no business to be had, no one's fighting over market share. But I'm hopeful that as we come out of this and business recovers, people are more open-minded about the businesses and partnerships that they have. And Airbnb, if Brian's watching,
I was just going to say, I'll make sure to ask Brian that question next time we chat. So generally then, what is the outlook for you? Since we're talking about staffing, we don't know how long this is going to go on for. We don't know how bad the second waves of the virus are going to be. We don't know when there's going to be a vaccine. Are you reconsidering your own staffing plan? Will we see layoffs? And can you or will you operate your own company more leanly if this continues?
Sure. So going into this crisis, OpenTable and Kayak both prided ourselves on being very lean and nimble and entrepreneurial. And we had, the most attractive profit margins in the industry. And that served us very well as we entered the pandemic because we didn't have to make as many costs and staffing changes as others in the space. We didn't have to worry about our own survival. We had a healthy business, a very healthy balance sheet. And we took a look at what we were doing. We cut all discretionary spend very quickly, including marketing and overhead. And then we took a look at our staffing. And what we said is we already reduced 25% of our staff, half through layoffs and the other half through furloughs. And as we look towards 2023, we wanted to get one round done. And now we're actually bringing people back because as travel demand picks back up and as restaurants reopen, we need people. So we need salespeople, we need customer account people, and we brought back our first folks last week, which I was delighted to welcome back.
All right, Steve, thanks so much for giving us a view into what's happening in these businesses. We're all very curious. Steve Hafner, CEO of Kayak and OpenTable. We'll check back in with you as things progress. Thank you.
Thank you, Emily.
Okay, still ahead, an ex-eBay CEO is said to have triggered a scare campaign that is grisly and bizarre in all its detail, all to take down, supposedly, an online blogger. We will have that story next. This is Bloomberg. In a bizarre story, the FBI now claims former top eBay executives led a plot to silence an online blogger with the use of cockroaches and a bloody pig mask. Joining us now to discuss, Bloomberg's Spencer Soper, who covers eBay. So, Spencer, this story is absolutely baffling. You've got Devin Wenig, the former CEO of eBay, implicated here. What exactly happened?
So what triggered this is there's a couple that lives in the Boston suburbs. They publish an online newsletter. We believe it's e-commerce bites. It's not named in the indictment, but it covers news about online marketplaces, including eBay. And so they were getting these bizarre things happening to them, like receiving packages in the mail of live cockroaches and a funeral wreath and a book about how to survive the death of a spouse, and complained to law enforcement. And all of that eventually led to some eBay employees who were found to have, allegedly led this harassment campaign in an effort to scare this couple away. There's a very long federal indictment in it. It does not refer to Devin Wenig by name, but we've been able to corroborate that he is indeed Executive One referred to in this indictment. He has not been charged with a crime. The people who have been charged with a crime are security workers within eBay, former security workers of eBay who allegedly did these deeds. The big question now is, why? Were they folks who went rogue, or were they directed to do any of this stuff by people above them?
Why, and why? Yes, that is the question. What's next? I mean, what would the next steps in this particular case be?
Well, so these people the indictment was just revealed Monday, and these people have been charged. So obviously, if these folks have anything else to say, this would be a good time for them to do it in terms of trying to get a deal or that sort of thing. So that's, I think, what we're watching for is to see is if these folks who have been directly charged with crimes in this, if they have anything more to share with federal prosecutors, and if any of these criminal indictments move up the food chain of eBay, or if it just kind of stays where it is.
Just a quote from your story: "We are going to crush this lady," one employee described in the filing as Executive 2 texted Executive One, who is Devin Wenig. Quickly, could this have had anything to do with him leaving the company?
Oh, absolutely. These are all those things. The timing of it all corresponds. So, prosecutors allege that this behavior began, I think, in August, right about the time Wenig left, and so there's definitely a connection.
All right, Bloomberg Spencer Soper. We're going to continue to follow this story, bloody pig masks and all. Thank you so much for sharing the details with us. And that does it for this edition of Bloomberg Technology. Bloomberg Daybreak Australia is next. I'm Emily Chang. This is Bloomberg.